Then we have lease incremental borrowing rate of interest is the rate of interest the lessee would have to pay on the similar lease, or if that is not determinable, the rate that at the inception of the lease. So we have rate of interest. Okay, the is the lessee's incremental borrowing rate of interest. So I am borrowing. Okay, I'll have to pay the rate of interest. So rate of interest the lessee would have to pay on a similar lease, or if that is not determinable, the rate that at the inception starting of the lease, the lessee would incur to borrow over a similar term and with a similar security the funds necessary to purchase the asset. So it is lessee's incremental borrowing rate of interest. What it is? So lessee's borrowing rate of interest is the rate of interest the lessee would have to pay on similar lease. That is the so I'm required to pay 10% on a similar lease. Okay, similar lease I had made with Mr. B also. I'm required to pay 10% there. So if with Mr. A it is not determinable the interest amount, then I can use Mr. B's rate of interest calculation here also. Contingent rent is that portion of the lease payment that is not fixed in the amount but is based on other factors than just the passage of time. So factors other than passage of time. So we have contingent rent. The contingent means what? It is not determinable. We don't know exactly what it is. Later on we come to know. Because with the passage of time we come to know. Classification of lease. The classification of lease is based on the extent to which risk and reward incident to ownership of a leased asset lie with the lessor or lessee. Risk include possibility of losses from idle capacity or technology, obsolescence, and of variations in return due to changing economic conditions. Rewards may be represented by expectation of profitable operation over economic life of the asset, and gain from appreciation in value or realization of residual value. So this is what this is related to risk. Risk includes what? Risk includes possibilities of losses from idle capacity or technology obsolescence. Okay, so there can be risk of having an asset on lease. So what all are the problems? What all are the risk? So risk can be loss from idle capacity, technology obsolescence, variation of return due to changing economic conditions. Reward may be represented by expectation of profitable operations over the economic life of the asset and of the gain from appreciation in value or realization of residual value. So see, they have mentioned 3 to 4 risks. So idle capacity, technology obsolescence, variation in return due to changing economic conditions. Rewards may be represented by expectations. So 3 points under risk. Now we have rewards may be represented by expectations of probable operations over economic life of asset and gain from appreciation in value or realization of residual value. Then we have lease are classified into two types. So risk and reward, two things they have given in above point. Now we are going for finance lease and operation lease. So what is finance lease? A lease is classified as finance lease if it transfers all its risk and reward eventually to other person, that is lessee. What is operating lease? A lease is classified as operating lease if it does not transfer substantially all risk and reward incident to ownership. So one which transfers, that is finance lease. One which does not transfer, that is operation lease. A quick read. I'll take a pause, then we'll go for next. Next, finance lease. Finance lease is the lease that transfers substantially all risk and reward incident to ownership of an asset. Very, very important short note. Compulsory question, higher chances of asking it. Whether a lease is a finance lease or an operating lease depends on substance of transaction rather than its form. So we have finance lease. So what is finance lease? Finance lease is a lease that transfers substantially all risk and reward incidental to ownership of an asset. Whether lease is a finance lease or an operating lease depends on substance of transaction rather than its form. Situations which lead to lease being classified as a finance lease, the lease transfers ownership of asset to the lessee by the end of the lease term. The lessee has the option to purchase the asset at a price. So we have situations, and in these given situations we can classify our lease as finance lease. So what all are the situations? The lease transfers ownership of asset to the lessee by the end of lease term, so that is finance lease. Then at the end of lease term, say it is for 5 years, at the end of 5 years the asset will be transferred to the lessee. He will become the owner. The lessee has the option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the date the option becomes exercisable, such that at the inception of the lease it is reasonably certain that the option will be exercised. The lease term is for a major part of the economic life of the asset, even if title is not transferred. So, lease term is for major part of the economic life of the asset, even if the title is not transferred. So, if the economic life of the asset is 10 years, I can have lease for 10 years. At the inception, that is at the beginning of the lease, the present value of minimum lease payments amounts to be leased substantially all the fair value of the minimum lease rental. Means what? Whatever happens, whatever is the market situation, even if we face COVID like situation, I should get the minimum amount. The leased asset is of specialized nature such that only the lessee can use it without major modifications being made. Indicators of situations leading to finance lease. So we have finance lease. Okay, so what all are the situations which will lead to finance lease? If the lessee can cancel the lease, the lessors losses associated with the cancellation are borne by the lessee. So here finance lease is little strict. So suppose if you cancel your lease part, so that cancellation amount, the cancellation charges will be borne by the lessee and not by the lessor. Gains or losses from fluctuations in fair value of residual fall to the lessee, and the lessee can continue the lease for a secondary period at the rent which is substantially lower than the market rent. So this is related to our finance lease. So lease can continue, the lessee can continue the lease for secondary period also at a rent which is substantially lower than market rate. So suppose market rent is 10,000 and the lessee wants to continue at 8,000, 9,000, he can do that. Gains or losses from fluctuation in the fair value of residual fall to the lessee. So that is the second point and third point. So 3 points under indicator of situation leading to finance lease. A quick read, I'll take a pause, then we'll go for next treatment of finance lease. Treatment of finance lease in financial statement of lessee. Treatment of finance lease transaction is very significant because if such transactions are not reflected in the lessee's balance sheet, the economic resources and the level of obligations of an enterprise are understand, thereby distorting financial ratios. So here they have shown how to go for treatment of financial lease in financial statement of lessee. So in financial statement of lessees, you'll have to show your recognition of finance lease, how to matlab, whatever is the amount, how you will show in your balance sheet, you have to show, lessee will have to show in the balance sheet that is financials, the amount of rent which he is paying. Such recognition should be at the amount equal to the fair value at the leased asset at the inception of the lease. Inception is again starting point. However, if the fair value of the leased asset exceeds the present value of minimum lease payment from the standpoint of the lessee, the amount recorded as an asset and a liability should be present value of minimum lease payment from the standpoint of the lessee. So this forms part of numerical questions. So what we can do is we can go for numerical questions. Let me give a read to disclosures. Disclosures of finance lease by lessee is very important. Here you have the lessee should, in addition to the requirement of AS10, accounting for fixed asset, AS6 depreciation, accounting, and governing statutes, make the following disclosures for finance lease. Asset are acquired under finance lease as segregated from the asset owned for each class of asset. So there should be classification. These are my owned assets. These are my leased asset. For each class of asset, the net carrying amount at the balance sheet date, it should be reflected separately. A reconciliation should be done. Reconciliation between total minimum lease payment at the balance sheet date and their present value. In addition, an enterprise should disclose the total of minimum lease payment at the balance sheet date. Then we have contingent rents recognized as expense in the statement of profit and loss for the period. The total of future minimum sublease payment expected to be received and non-cancelable sublease at the balance sheet date. General description of lease. So all these things you need to describe, you need to disclose. Whatever happens, you need to disclose. So disclosure points they have mentioned here. Let us quickly go for next topic. So treatment of finance lease in financial statement of lessor. So how to treat finance lease in financial statement of lessor. Recognition of finance lease by lessor. Lessor is the owner who is going to give your asset. Lessor should recognize asset given under finance lease in its balance sheet as receivable amount. The recognition of finance income should be based on pattern reflecting a constant periodic rate of return on net investment of the lessor outstanding in respect of finance lease. So that is related to lessor. How he will show? He will show in the form of investments. Then we have disclosure of finance lease by lessor. The lessor should make the following disclosures for finance lease. So here disclosure made by lessor is given. Earlier disclosure made by lessee was given. Okay, it is very easy. A quick read. I'll take a pause. Then we'll start with operating lease. Operating lease. Operating lease is a lease other than finance lease that we studied earlier also. Treatment in financial statements of lessee. Recognition of operating lease. Lease payments under an operating lease should be recognized as an expense and it is shown in profit and loss account. See, when we were studying finance lease, it was shown in balance sheet, receivable and payable. But operating lease is shown in your P&L and P&L account. That's an expense. Lease payments under operating lease should be recognized as an expense in the statement of profit and loss on a straight line basis over lease term unless another systematic basis is more representative of the time pattern of user's benefit. Disclosure of operating lease. The lessee should make the following disclosures for operating lease. The total of a future minimum lease payment under non-cancelable operating lease for each of the following period, not later than 1 year, later than 1 year and not later than 5 years, later than 5 years. So you are required to make following disclosures. Lessee is required to make following disclosures. So not later than 5 years, later than 5 years, total of future minimum sublease payments expected to be received under non-cancelable transactions, lease payments recognized in the statement of profit and loss for the period. So all these terms you need to disclose. You are required to disclose. You as lessee, you are required to disclose in your P&L account. Treatment of finance, the treatment in financial statements of lessor. Recognition of operating lease. The lessor should present an asset given under operating lease in its balance sheet under fixed asset. So see, operating lease, the lessor should present an asset given under operating lease in its balance sheet under fixed asset. Lessee income from operating lease should be recognized in the statement of profit and loss on a straight line basis over lease term, unless another systematic basis is more representative of time pattern in which benefit derived from use of leased asset is diminished. So what we are doing here is we are recognition of operating lease. Lessor should present an asset given under operating lease in the balance sheet under fixed asset. He is still owner of that asset. बेच नहीं दिया है asset. He is still owner of that asset. Lease income from operating lease should be recognized in statement of profit and loss and straight line basis over the lease term unless another systematic basis is more representative of the time pattern in which benefits derived from the use of leased asset is diminished. So depreciation will also be given. Depreciation will be shown on in the P&L side, expense side. Income for operating lease income should be shown on the income side under P&L. Operating lease and depreciation of leased asset should be the basis consistent with the normal depreciation policy. Okay, even though you have leased out the asset, but normal form of depreciation will be provided. A quick read, I'll take a pause, then we'll take next. Then we have the next disclosures of operating lease. So a lessor should, in addition to the requirement of AS6, that is depreciation accounting, AS10, that is accounting for fixed assets, and governing statutes, make following disclosures under operating lease. Very, very important disclosures. So you need to know these disclosures. For each class of asset, the gross carrying amount, accumulated depreciation and accumulated impairment. So in simple words, operating lease or finance lease, lessor or lessee, they are required to disclose everything. What is the contingent amount? What is the general description? Accounting policy followed, rate, method of depreciation followed, rate of depreciation, everything they need to disclose here. Then we have next easy and interesting term, that is sale and leaseback. Last theory term, then we are done with, we'll go for numericals. Sales and leaseback transaction. So what is sales and leaseback transaction? I have machine. That machinery I want to sell because I'm in urgent need of money. So I will sell to Mr. A. Now without that machine I cannot work. That machine is necessary to me. So I'll take it back on lease. So sale and lease back. A sale and leaseback transaction involves sale of an asset by vendor and leasing of same asset back to the vendor. The lease payment and the sale price are usually interdependent as they are negotiated as a package. Accounting of sale and leaseback transactions. The accounting treatment of a sale and leaseback transactions depends upon the type of lease involved. So here we have sale and leaseback transaction. First you will sell, and then just because you were in need of the money, you will take that asset on lease. So accounting of sale and leaseback transaction, the accounting treatment of sale and leaseback transaction depends upon the type of lease involved. When a sale and leaseback transaction results in finance lease, any excess or deficiency of sale proceeds over the carrying amount should not be immediately recognized as income or loss in the financial statements of seller lessee. Instead, it should be deferred and amortized over the lease term in proportion to the depreciation of leased asset. So when sale and leaseback transactions results in finance lease. Then we have when a sale and leaseback transaction results in operating lease. So in such case, if it is clear that the transaction is established at fair value, any profit or loss should be recognized immediately. If the sales price is below fair value, any profit or loss should be recognized immediately, except that if the loss is compensated by future lease payments. So under sales and leaseback transactions, we have one concept. So if there is any loss, it should be recognized immediately. If that loss is fulfilled by the lease amount, that also needs to be recognized. For operating lease, if the fair value at the time of sale and leaseback transaction is less than the carrying amount of the asset, a loss equal to the amount of difference between the carrying amount and the fair value should be recognized immediately. For finance lease, no such adjustment is necessary unless there has been an impairment in value, in which case the carrying amount is reduced to recoverable amount in accordance with the accounting standards dealing with impairment of asset. Okay, a quick read. So here they have mentioned how to deal with sales and leaseback. Sale and leaseback is nothing. In simple words, if I want to understand, sale and leaseback means I was in urgent need of money. What I'll do is I'll sell my asset, and after selling my asset, I'll take that asset on lease from the same person. Sale and leaseback. Okay, and they have given us the accounting of that sale and leaseback transaction. Now let us go for sum number one. Mr. Arun Limited has taken uh, an equipment on operating lease for coming 5 years. As per the agreement with the lessor, it will not make any payment for lease rentals for first 2 years and will have to pay 21 lakh in each of the following 3 years. So what you have Arun Limited has taken an equipment and operating on operating lease. He has taken an equipment on operating lease for coming 5 years. 5 years is the period of lease. As per agreement with the lessor, it will not make any payment for lease rental for first 2 years. As per agreement with the lessor, it will not make any payment for lease rental for first 2 years and will have to pay 21 lakhs in each of the following 3 years. So they have made an agreement that for first 2 years no payment, but after that he'll have to pay 21 lakhs for each for 3 years. Advise Arun Limited on accounting of the lease rentals in this case. So we have as per AS 19, lease payments under an operating lease should be recognized as an expense in the statement of profit and loss on a straight line basis. So we have lease payments under an operating lease should be recognized as an expense. We saw that in our theory content. And in the statement of profit and loss on a straight line basis over a lease term unless another systematic basis is more responsive. So it should be recognized as an expense. Okay, on a straight line basis. The pattern of payment in this case does not follow straight line basis, rather it is arising towards the end of the lease period. For accounting purposes, such effect should be neutralized, that is, total payment of 63 lakhs in the last 3 years should be spread over entire 5 years. 12 lakh 60 should be charged to the statement of P&L every year. So what was the agreement? 21 lakhs for last 3 years. So you don't do that. What is the rule? Operating lease should be recognized as an expense and on a straight line basis. So every year it should be same. Straight line basis means every year I should pay 1,000. So 21 lakhs for 3 years, that means it is 63 lakhs. 63 lakhs you divide by 5, 12 lakh 60 you show in your P&L every year. That is the correct way of presenting. A quick read, I'll take a pause, then we'll take sum number 2. Vishnu Limited leased a printing machine from Garur Limited for a period of 3 years. The useful life of printing machine is known to be 5 years. So see, they have taken it for 3 years. Lease agreement is for 3 years, but useful life is 5 years. It was agreed between lessor and lessee that the amount will be paid in 3 installments, and at the termination of the lease, Garur Limited will take back the said machine. The following details are available in respect of machine lessee. Cost of printing machine is rupees 15 lakhs. Unguaranteed residual value at the end of the lease period is 2 lakhs. Fair value of machine is 15 lakhs. Internal rate of return of investment is 10%. You are required to state whether the lease is a finance lease or an operating lease. So you'll have to identify based on question, you'll have to identify which type of lease it is, and you'll have to find out the unearned finance income. Okay. So how to do this? First, they are calculating unearned finance income. So for that, you'll have to 2 lakh rupees amount is your unguaranteed residual value, right? You will be getting after your 5 years. So after 3 years. So 2 lakhs multiplied by this, you will get your present value. This present value you subtract from your total value of asset, fair value of machine. You will get present value of lease payment, 13 lakh 49,000. This 13 lakh 49,740 divided by 15 lakh, you'll get percentage. Okay. Now what you have to do, as the present value of lease payment makes a substantial portion of the fair value, the machine leased by Vishnu Limited from Garur Limited is a finance lease by nature. So they have given the explanation also why it is finance lease, because the fair value makes a substantial portion of fair value at present, as the present value of lease payment makes the substantial portion of fair value. That's why it is termed as finance lease. And then you have the calculation part, whatever is your lease payment. So this is the total payment up to 3 years. So what will be the present amount? So that you will find out. Okay. You have to divide by 2.48. This is your PV factor for all 3 years. So PV factor, calculate for 1 year, 2 year, 3 year, sum it up, aggregate of 3 years. Here in question they have given you 2.4868. If they are not giving you, then calculate for 1 year, 2 year and 3 year and add, sum it up. You will get for aggregate 3 years. Done with your answer. So 5,42,762 is your annual lease payment. This into 3 years plus 2 lakh is your amount, unearned residual amount. If you add that, you will get your gross investment in lease. Gross investment minus 15 lakhs, you get unearned finance income. Done. So what we did here, we went for present value. We calculated present value of residual income first. Okay, so 2 lakh, I'll be getting residual value at the end of third year. So I bought that to the present value. So 1,50,000 is my present value. 15 lakhs minus residual value, I'll get my exact amount of income. Okay, I'll get exact amount of my income. So that is 15 lakh minus 1,50,000. I'll get rental amount, lease amount. Now this lease payment, I'll divide it by my total value of the machine. I'll get percentage. So 90%. So it is very heavy. Okay, the percentage 90% part is lease. So obviously this will form part of your investment. So this is finance lease, not operating lease. So you please show it as finance lease. Now, 13 lakh 49,000 is the entire lease amount. But what is per year amount? Okay, annual lease payment every year 1, 2, 3. What is the annual lease amount? That is, you divide it by 2.4868. Okay, what is 2.4868? That is your PV factor for 3 years. If you divide it, you will get 5,42,762. This into 3 years, you will get lease payment for 3 years plus 2 lakh is your residual amount. Total gross investment in lease minus 15 lakhs. So 3,28,000 you are paying extra. That is your earned finance income. In terms of lease, you are paying 3,28,286 rupees extra. I hope you are comfortable.